Good day, everyone. Thanks for joining us. I'm in the chats. You tune into the Market Beast Edition. Your fellow competitors, big AMC. We're going to pull up an old school chart for AMC. And we're going to give you guys just two levels as a potential retracement. That's it. We're also going to explain in greater detail in terms of the consolidation range, how relevant it is and how relevant it has been for some time. And we're also going to go over that long-term potential retracement that we went over and explain everyone in terms of the obligation from the sellers at this current moment. So welcome back, loyal family. If you're new here, we only explore price action. Let's dive right into the charts here. So today is July the 22nd, 2021, and the current price of AMC, $38.02, slightly negative 6.6% for the day. Okay. Before we get started, ASMR, interesting analysis. Let's go ahead and give a really quick credentials check if you're new here. I just want to show you June the 17th, 2021. If you're looking at the screen there, that range has been the same when the price is like $60. This is the same range that we have on the chart. This is our old school chart right here. If you notice this little oval red here, that's when we made that post, guys. This range where a lot of people never thought it would reach $42 ever. And they were right. It actually went substantially, well, not substantially lower, but it went lower than $42. So what I wanted after that shameless promotion there, just kind of a credentials check. The range is very relevant, okay? And I'm going to break down in details about the range. We've already explained like how to find a range. This is just kind of one way to find a range. There's multiple ways, but this is just kind of one unique way that I find ranges, okay? And I think it's relevant because of the most recent move in the market. If you notice, this daily candle pokes its head right back within this. I'm going to call it a seller's consolidation range. The only reason that I'm calling it a seller's consolidation range is because the sellers have broken out. You should notice that $20 down. I'll explain that in 1 second, okay? Notice the sellers have broken out of the consolidation range. If you knew, yes, breakouts do consist up to the downside. And when I say the sellers have broken out and how this is a seller's consolidation range right now, because the sellers are obligated to make a new low. Because on the channel, of course, you guys know what I'm going to say, okay? We're going over support, resistance, and patterns. And to verify a downtrend, you're looking for lower lows and lower highs. The market just made a low, okay? From the $63 level, it just made a lower high so far. But we have to give this market a little bit of time, at least the amount of time equivalent to the daily candles below the $42 level, okay, which is going to be 6 days. So we actually have to give this market another full 4 market days, okay? And I realized in the last video we were saying we had to give AMC 4 market days. Unfortunately, AMC did not break above that $48 level. So as a result, the sellers realized that the buyers don't have enough strength so far to propel the price above $48. So essentially the price is going lower. That's the reason why the price is going lower. Maybe it's associated with news. You may associate it with as much news as you possibly can. The price action is suggesting that the market just attempted to break back within a seller's consolidation range to move higher. And the two retracement levels that I was going to leave you guys out with is going to be, well, it's the same thing that we went over on the last video, $36. And as a potential double bottom scenario, it'd be at about $32. So just take notes of those two levels as a potential retracement, assuming that the buyers have strength. Not saying that, yes, Napolean said buy at 36.32 and you were wrong. No. To show a higher low, it would go down to $36 and then break through $42 at some point here in the future. And if it goes down to 36, and if it goes down to $32, that means that buyers are intercepting this market and propelling it to the upside. All right, hopefully we're clear about that. I'm not saying it'll go whole support. I'm not saying it's actually going to go down to $36. Just giving you the levels as a potential retracement. All right. So remember, the sellers, they do have an obligation right now, guys, to break the price down, to make a new low. The new low would be below $32. Now, in closing here, let's just kind of briefly explain. I know some may be asking, hey, why didn't the price go to $20 like you said it would go down to $20? Let's be clear, guys. Hopefully my verbiage is good. I'm going to go back in the videos just to make sure I'm using the correct verbiage. When we go over buyers and sellers obligation levels, right now it's clear as crystal for me to see that the seller's obligation is to break the price below $20. I think we gave it like a $25 to $20 range. But let's just stick with $20 for now, since it is measurable on a candle as the most dramatic rejection back in January 2021, January the 27th. Since that candle is measurable on the daily, I'm going to stick with $20 for now. So when I say the sellers have an obligation, that means that they must fulfill their obligation to show strength. If the sellers are having trouble fulfilling their ultimate obligation, which is to break the price below $20, then that's showing financial strength in the markets, and the buyers are not allowing the sellers to push the price to the downside. And I know some saying, no, dude, you're wrong. It's going to $20. No. I'm not saying it's going to $20. I'm giving you the levels to understand the story between the buyers and the sellers. So when I say that the seller's obligation is to break below $20 and you don't see that happening, not even close to being close to coming to fruition, not close to fulfilling their obligation, then assume that the market has buying strength. That's it. Okay? So hopefully that sums up me saying, is it going to $20, guys? If the market goes to $20, great. It has you get a better buy-in price. I don't know, right? I'm not going to lose my shirt if it goes to $20, and I'm not going to lose my shirt if it never goes to $20, okay? One way or the other, I'm intrigued by this beautiful story, and I understand the buyers and sellers' obligations. And if you just develop an understanding of buyers and sellers and zoom out and understand when you see previous highs, that's the buyer's obligation. When you see the most recent lows, those are sellers' obligations. And if they're not fulfilled, it's showing that the opposite party has strength, guys. It's a really nice story if you just, and I realize, some people are saying that what about the naked shorts? Guys, I do not have enough comprehension skills to understand that stuff. All I have and an ability to do at sometimes, right, is understand these candlesticks in the story. All right, so you have the seller's obligation. In the short term, the seller's obligation is the two retracement levels that we gave you guys, 36 and 32. So if you see them getting stopped out, if the sellers are getting stopped out from 36 and 32, yeah, that means that there's strength here. There's financial strength here. And the market is just going to consolidate sideways eventually and at least challenge or break through that $42 level at some point here in the future. Let's give the market at least another 4 days to see what's going to happen with this $36 to $32 level. As a potential retracement, if it moves higher, that means the trend is continuing. The trend is your friend. It's to the upside. So I'm saying, no, what are you talking about, dude? It's not to the upside. Did you see the market is going down? The trend is not up. It's going down. No. If you zoom out, like I just explained, if you zoom out. You see all these daily candles? The uptrend started all the way. Let's see if we can just kind of zoom in. It's getting a long video here. Zoom out. Let's see the uptrend from the daily candles, not the higher time frame. The higher time frame is suggesting this is just kind of an explosion happening from a consolidation range. But from the daily candles, the uptrend the uptrend was initiated January the 5th. Okay, that was the lowest point recorded at about $1.91. Okay, so that's kind of the most recent low. Is that the actual low? I don't know, guys. I'm open to anything with this market. All right, January the 5th. That was the start of not the start of the uptrend. That was the lowest point before the uptrend started. You see, I'm very technical. I'm very, very careful with my verbiage. So that's why when I hear people saying, oh, you said it's going to, no, guys, I know exactly what I said. All right. So hopefully you guys enjoyed that. Hopefully you have the overall buyers and sellers obligation. The ultimate seller's obligation is $20. The short-term obligation from the buyers is to protect 36 to 32. Okay, and of course the sellers, their obligation is to break below 32 in the short term, just the daily candles here, all right? So let's see how this plays out. It's not aging well or not this isn't like age well or age good or bad. It's explaining the story, all right? And hopefully you understand the story in terms of what to look for in the price action, okay? So hopefully you guys enjoyed that. So leave an appropriate thumb just below the video if you enjoyed the content. Leave a comment so that the YouTube algorithm can promote this video. If you're new, we also cover the alternative markets. We go over Bitcoin and altcoins. Kind of subscribe at the bell. We'll send you that information when it is available. All right. So I appreciate your time. Thanks for stopping out. And we'll talk soon. Execute your strategies. Be kind out there and responsible. And bye for now.